Hey everyone, welcome back to Corporate Dakota. Today, Thunder Mountain Gold Incorporated THMG just filed a Form 8K, and I'm seeing two big moves that could really shape its future. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is trying to raise significant cash while also settling a pretty large chunk of debt with new shares. Alright, so Thunder Mountain Gold Incorporated, a company in the mining sector, has filed this report to let everyone know about some important business decisions. It looks like they are doing two main things to get their finances in order and fund their projects. First, let's talk about debt. Companies often owe money to people who have provided services or loans. When a company cannot pay this debt in cash, it can sometimes issue its own stock to settle it. This is often called a shares for debt settlement. Thunder Mountain Gold is planning to issue a lot of their common shares, specifically up to 1,578,036 shares, to pay off about 1.1 million US dollars of debt. This debt is owed to their president and chief executive officer, along with some former service providers, including one former officer. Essentially, they are giving away a portion of ownership in the company to clear these debts. It is interesting that a significant portion of these shares, 670,714 shares, are going to the insider, their president and CEO, to settle 469,500 US dollars of debt. This is considered a related party transaction, meaning it is between the company and someone closely connected to it. Because of this, they need to follow specific rules to make sure this is fair. They are saying the value of these shares is not more than 25% of the company's total value, which allows them to skip some of the more complicated approval steps. This whole debt settlement still needs the okay from the TSX Venture Exchange, which is like a stock market regulator for smaller companies. Especially in Canada, the shares they are issuing are considered restricted. This means they cannot be easily bought or sold by people in the United States without going through a special registration process or meeting certain exemptions. Month holding period, meaning the recipients cannot sell them right away. Now, let's move on to the second big piece of news in this filing, which is a plan to raise money through a private placement. This essentially means they are selling shares directly to a select group of investors, not on the open stock market. The company is looking to raise around 6.4 million US dollars by selling units. Each unit will have one common share and what is called a half warrant. Now, what is a warrant? Think of a warrant as a coupon that gives the holder the right to buy more shares later at a set price. In this case, each whole warrant lets the holder buy one more share for $1 US, and these coupons are good for 2 years. The money they raise from this private placement is intended for a very specific purpose, to move forward with their South Mountain project. This includes things like drilling to find more minerals, analyzing those samples, running geophysical surveys to understand the ground beneath them, and general operational costs to keep everything running smoothly for these projects. Similar to the debt settlement, this private placement also needs approval from the TSX Venture Exchange. And again, these securities being sold are not registered in the US, meaning they also have restrictions and cannot be sold to people in the US without proper registration or exemptions. They will also carry a restrictive legend and be subject to a 4-month hold, just like the shares issued for debt. So that is the core of what is happening here. They are settling a chunk of debt by issuing shares and simultaneously trying to raise a much larger sum of cash through a private placement for project development. Looking at the bigger picture, Thunder Mountain Gold Incorporated is a company with a market cap of about $70 million, trading around 75 cents a share. They have only 3 employees. This means they are a very small operation. The fact that they are settling more than $1 million in debt and trying to raise over $6 million for their projects tells us they are in a growth phase and need capital to move forward. The market's reaction to these announcements has been somewhat positive, with headlines pointing to the fundraising and debt settlement. However, investors need to be aware of the dilution that comes with issuing new shares. When a company issues more shares, the percentage of ownership for existing shareholders gets smaller. In this case, the debt settlement alone involves over 1.5 million shares, and the private placement could add millions more, depending on how much they raise. For a small company like Thunder Mountain Gold, this capital is crucial to advance their South Mountain project. If the project yields positive results, it could significantly boost the company's value. However, if the exploration doesn't find what they are looking for, or if the costs overrun, they could be in a difficult position. This is a common story in the junior mining space, where high risk often comes with the potential for high reward. My biggest concern is always the dilution for existing shareholders when a small company needs to raise so much capital. However, this is often the reality for companies in this sector needing to fund expensive exploration projects. What I'm actually looking for next is confirmation of the TSX Venture Exchange approval and initial progress reports from the South Mountain project. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.